Invest founder and CIO Ivana Delevska joins us now. She is a tech investor. So Ivana, as we are seeing this pullback here, does it make sense for people to add to positions? And if so, how should they be thinking about doing that?
Thanks for having me, Julie. So we do still see a lot of opportunities in the data center value chain. And I think it makes a lot of sense to add to that on this pullback. This has been a pretty meaningful pullback on what is a headline risk, right, that you always have in the sector. And the stocks are down more than 10% from the levels. So I think it's a very good time for investors to take a look at the data center value chain.
And when you say data center value chain, Ivana, what name specifically are you talking about?
So the core of the data center value chains would be opportunities inside the rack. So would be processors like Nvidia, AMD. But then the opportunity is broader than that, right? It's basically the entire infrastructure build out around data centers. So there's opportunities in thermal management, power management, even at the utilities level, because energy is one of the big constraints that we see. So it's really going to be across the board.
Ivana, earlier today I talked to the Blackstone president and chief operating officer, Jonathan Gray. Blackstone, a huge investor in data centers. And I asked him sort of how he's thinking about a little bit of the skepticism that's been out there right now. And he talked to me about that investment. Listen to what he had to say.
We think there are going to be a lot of changes. Some of that may take a bit of time. But our focus has really been on building the backbone, the infrastructure of the 21st century, which is the data centers and the power that goes with it. I think this will come. What the profitability will be, which applications will win, I think that is uncertain. But I think the path here towards more AI, more compute power, and therefore more infrastructure needed is the way to go.
We'll discuss what this was all about in today's video. But first, if you want to stay up to date on NVIDIA's latest updates and the latest news from the stock market, you can subscribe to our channel. We post daily updates about the biggest changes and catalysts in the market. So click the bell icon if you don't want to miss the newest market updates. The well-known CEO of Ark Invest, Cathie Wood, has publicly regretted in a deleted post an action she had taken regarding Nvidia quite some time ago. Her company has since learned a lot from this decision.
Caroline, we talked in the last segment about Amelius research analysts that started to like some of these second wave AI players as they talked about. Is that becoming more of a feeling that you're hearing on Wall Street, or is that still pretty contrarian?
No, that research report from Melius earlier this week is really, one of the only times that I've heard. I mean, his whole point was just kind of the AI catch-up play, right? So, maybe focusing on some other names, not necessarily that Nvidia is poised for a big downfall. I mean, I will say that New Street did downgrade Nvidia to neutral from buy with a one-year price target of $135. That was last week, thinking that basically shares are fully valued at these levels. I mean, $135 implies about $5 upside from here, saying the quality of the franchise is nevertheless intact, but they would only buy on prolonged weakness or if the outlook beyond 2025 increases considerably, it gets even more bullish. So New Street does prefer an AMD or a TSMC instead of Nvidia, but you take a look at the breakdown, 91% of analysts still have a buy rating on Nvidia. The median price target is 135, but it's hard to even look at that median price target because Nvidia is one that we keep seeing the price target increase as Nvidia continues its run higher. We saw Wolf Research and UBS just notch it to 150. So, analysts continue to make changes on this one. UBS, there was an analyst there that did say that there's this wall of worry for Nvidia, but also pointed to the strength in Blackwell in terms of that exceedingly robust demand, in his words, as why he thinks that Nvidia can climb that wall of worry.
In an already deleted post on X, Cathie Wood publicly apologized for selling Nvidia shares prior to their sharp increase. She stated that they would have held it in 2022 if they had known the market would reward Nvidia and the other 6 outstanding stocks that will be the main beneficiaries of artificial intelligence, like Tesla, which she refers to as the largest AI project on Earth. The renowned portfolio manager of Ark Invest, Cathie Wood, boldly projected that her Ark Innovation ETF would increase by 50% yearly over the following 5 years. However, by 2024, Ark has decreased by roughly 5% this year, falling short of her audacious forecast. The lack of Nvidia in the fund holdings is the primary cause of this deficiency, which has had a phenomenal negative impact on the ET's recent performance, even though Nvidia shares have increased by 168% so far this year. Naturally, Cathie Wood is well known for her extraordinary stock trading strategy, which involves selling high-performing stocks to purchase underperforming ones. However, this strategy wouldn't work well in the current market, which has few strong-performing stocks. This time, however, she made a grave mistake by selling Nvidia too soon and failing to allow her winning stocks to continue growing, which resulted in her losing out on substantial gains for her primary ETF. The chip giant stock has increased by 172% this year, briefly becoming the most valuable company in the world last month. Did Cathie Wood learn from her error? And what should investors do with their Nvidia shares? While investing in Nvidia stock seems easy enough these days due to the company's exceptional growth, Wood oddly couldn't foresee Nvidia's dominance approaching, and her expectations turned out to be disastrous. In fact, Wood's funds sold at least $4.5 million worth of Nvidia shares this year, losing out on billions of dollars. Ultimately, Nvidia's stock price has exceeded Wood's pessimistic forecast. Hi everyone, and welcome back to the investing tutorial. Let's go over this. AI remains worth watching segment for global investors in 2024. But how do you keep up with the AI sector and others that you may be interested in? I recommend trying Moomoo, a sponsor of today's video. Some features to discover stocks with investment potential has blown me away. You can use the industry chain to find companies throughout the entire AI sector, or use the stock screener to filter stocks according to your investment strategy. Having the option to set parameters like industry, market indicators, financial indicators, technical indicators, and more. Ultimately, discover potentially undervalued stocks and those that appear to show buy signals to help inform your strategies in an effort to capitalize on AI-related opportunities. At the same time, Mumu is one of the cheapest trading platforms I've found. It offers zero commission on stocks, options, and ETFs. After comparisons, I've discovered the fees are among the lowest. Right now, new users who open an account using my link and make a qualified deposit can get up to 15 free stocks, enjoy a limited time 8.1% APY on idle cash for 3 months, and earn up to $300 cash reward for transferring in their portfolio. These rewards can be earned together, so don't miss out. And thanks again to Mumu for sponsoring this portion of the video.
That's a substantial argument to be made right now, because I do think that when you have a name that's run up to this extent, it's all of our fears, really. It's like standing in front of this moving freight train, it feels like, to try to be against the Nvidia momentum. But also, I guess the bullish thesis, and I'm sure you see this continually, is the fact that maybe this name isn't actually overvalued at this point. I mean, it trades at a multiple that is actually cheaper than an AMD, which to me is just frankly amazing when you look at some of the winners and losers in this space, that it still trades at 43 times. I know that's gone up, almost double over the last several years, but it's actually still relatively affordable.
Yeah, and I think the big question for an Nvidia is looking further out. How much of that was a pull forward in terms of what's next once maybe some of the competitors catch up, or once there's not as much chip demand for an Nvidia. But it seems like that's not really on the radar right now. Going back to what Alex had to say, too, I think that, there was the Citi note I was reading about in a Bloomberg article. A Citi analyst was saying, or a group of analysts said, we continue to suggest investors take profits in AI high flyers, in particular the chip makers. Didn't necessarily call out Nvidia, but said investors should rebalance toward a broader array of AI stocks across the value chain. Our estimates suggest stock prices imply lofty expectations, but long-run consensus estimates suggest most are attainable. So essentially, sentiment is very optimistic, but still shy of a full-blown bubble. That being said, they have a buy rating on Nvidia and a $150 price target, so $20 higher than where it's currently trading right now. So maybe that plays into that Melius research theme a little bit, but for the most part,
Wood acknowledges that Nvidia is a leader in the current AI revolution, but she also thinks that its stock is susceptible to overbuying and a correction because she thinks this pattern will repeat itself, and the current excitement will result in an overstock and a market correction for NVDA. Many Wall Street firms have even raised their price targets on the tech giant, indicating very strong confidence in its future. Cycles all of these statements sparked intense criticism of Wood's determination to undervalue Nvidia stock. Some analysts even called her out, saying that making a mistake is one thing and being keen on not learning from it is another. Nvidia has decided to increase its orders with Tesumk by an incredible 25%, believing that it has not yet reached its full potential and that it still has milestones to achieve as a result of this, debunking Wood's pessimistic predictions. The company is expected to deliver about 60,000 units of its GB200 NVL72 and GB200 NVL36 servers, which are priced at $3 million and $1.8 million per unit, respectively. If you've watched this far, I want to thank you. These videos take a lot of time and effort to make. Does this mean that Nvidia stock is currently a solid buy? Let's find out. Nvidia stock a good buy right now. But first, thank you if you made it this far through the video. These videos take a lot of time and effort to make, so if you enjoyed them, please hit the like button and subscribe to the channel. Your support helps us grow.
Yeah, and I was also reading that they highlighted basically like the underperformance of some of these names we've seen. We could see the laggards now start to outperform, but so far, again, betting against Nvidia hasn't worked. Is it the underperformers? I would say still continue to lag Nvidia. So it's why it's a great FOMO candidate as always. But appreciate the breakdown. Appreciate it as always, Caroline Wood, senior.
As everyone can see, Nvidia's supply chain has improved over the last 2 quarters. This has been made possible by a number of factors, including the strategic partnerships the company has formed with numerous partners to expand the supply chain of its GPUs. These partnerships include work with foundries that manufacture semiconductors and other important players in the tech industry, like Micron Technology, Foxconn, Samsung Foundry, and ASML, in addition to significant improvements to the company's production facilities, which have been made possible by Nvidia's constant pressure on its manufacturers to increase and improve their production capabilities through investments in newer technologies. However, this crucial improvement to their supply chain will now support the business's explosive expansion. Considering that the only thing preventing Nvidia from attaining even greater profit and income was keeping up with the colossal demand, and by maintaining a strong and effective supply chain, the company is going to experience a new chapter of sheer glory, with Nvidia gaining a competitive edge in the GPU war. A crucial battle as other businesses vie for supremacy in the AI and high-performance computing domains. Buying Nvidia stock is unquestionably a wise move. Nonetheless, what are your thoughts on Nvidia stock? Is it worth buying at the moment? Please share your opinions with us in the comments below. And don't forget to share your NVDA valuation with us. Go ahead and click the next video on your screen to see what businesses like Nvidia have been up to these past few days. I'll see you there.